Good morning and welcome to the ADS Securities Markets Update. Beginning with the Asian session, Australia came in with another disappointment figures. The trade balance deficit unexpectedly widened to minus 1.91 billion in May, comparing to a deficit of 0.78 billion, while it had been anticipated to narrow back to 0.16 billion dollars. This is the second monthly deficit in a row, and it's also the biggest trade deficit since February of last year, which led the Aussie dollar to decline across the board, declining the most against the British pound, while the Aussie dollar also slipped back to as low as 0.9450 after it's touched 0.95. As for the European session today, there are also a collection of economic releases from the UK, Spain and the Eurozone, which is likely to keep the volatility on the rise today. Beginning with the UK numbers, the national house price index is expected to rise by 0.6% in June, comparing to a rise of 0.7% in May. And the UK construction PMI is expected to decline slightly to 59.7 in June, down from 60, which would be the fifth consecutive monthly decline in a row. However, the numbers may come in better than expected, just like yesterday's manufacturing PMI, which came in with an upward surprise. In Spain, unemployment change is expected to decline by minus 147.3 thousand, comparing to a decline of minus 111.9 thousand, which would be the biggest monthly decline since more than 10 years. Finally, the Eurozone Q1 final GDP is likely to remain unrevised at 0.2%. Going forward to the US session today, there are two economic data sets will be released, which are likely to keep also to show an audible impact on the markets. The ADP non-farm employment change is expected to add more than 207,000 in June, comparing to 179 in May, while the factory orders may pose the first monthly decline in over 3 months by 0.4% in May, comparing to a rise of 0.7% in April. Finally, the Federal Reserve Chairwoman Janet Yellen due to speak today at 15 GMT time. The US dollar index remain under pressure. Also, further decline could be seen in the next few days. The next support level for the dollar index stands at 79.56, which is seen as the key level for the next few weeks, as it represents its 200-week moving average. And a break through that support may show or may likely to show further declines in the weeks ahead. This is it for today. You can follow us on our social media sites, Twitter, Facebook and YouTube, to get the latest economic releases, reports and analysis. Thank you for watching.